Hey everyone, this is Carla Godshaw with ApprovedForLoan.com, and I'm here with a very special guest, and I'll allow her to introduce herself.
Hi, everyone. My name is Alicia Swann. I'm associate broker / realtor with Virtual Properties Realty.
So the first step in the home buying process, as it relates to us, is that we will send you a link to go to our website to complete an application there, right? With that email, you will also have a list of documentation that you will need to provide to us as well, which would include, pay stubs, bank statements, W-2s. If you are self-employed, there are different set of documents for that, like profit and loss statements or 1099s and so forth. So it will be geared to that person, that individual that's applying. But once we receive that application on our end, we go ahead and first thing we want to look at is the credit of the individual. So we do a credit inquiry. Based on that credit inquiry, we'll have a follow-up conversation with our client to kind of let them know what we're seeing there, if there are things that we need to adjust or things that needs to be worked on, depending on what the score that he or she has. Also, we want to take a look at the debts of the individual. So that would be, to help calculate the debt to income ratio, so we can understand the maximum amount of home they can afford at that point. Once everything is good on that end, we go through the pre-approval process, and that really involves verifying all the documentation that they will present to us, and also running their file through an automated system that kind of just looks for any red flags or any issues potentially that may come up with the loan. And that system will give us a thumbs up, yay, okay, approved, eligible, or it may say approved with any issues that may come up that needs to be addressed. But we want to see that approved eligible status. Once we have that approved eligible, then we would provide their agent with a pre-approval letter, just let them know that, hey, things look good, let's go ahead and start the home buying process at that point.
Okay. So just to take it back a little bit,
sure.
I always get asked whenever a buyer wants to get their credit checked out, are you doing a soft pull initially, or are you doing the hard pull? So what do you need to do as far as because those inquiries can add up. So, people are definitely, want to know about that.
Excellent. Great question. So, and that's where the initial conversation comes in very valuable, because we want to find out, has the client been tracking their credit? That's very important. Usually I ask the client, hey, if they haven't been checking it, maybe go on one of those platforms that allow you to kind of view your credit and kind of see where it stands. If they're telling me that, it's on the lower end and those numbers are really at that margin where between, can we work and can it not work, I'll most likely do a soft inquiry with that person, just to kind of see where it is exactly. So that way, we're not just digging their credit and we'll be able to do anything anyway. So we always try to get an understanding of where do you currently stand with your credit. And if it's a situation where, we're in the high sixes or mid sixes, then we can, we can figure out that, hey, that will work. If they're telling me 580 and 540 and 570, chances are it may be on the lower side. So then the soft pull now will give us enough information so we can probably give some guidance, say, paying down a certain credit card, or just being able to address certain things. Maybe there are late payments or other things that's affecting the score, and we're able to maybe give some guidance to the client as to what they can do to see some immediate results there.
Okay, that makes sense.
Yeah.
So also, a lot of times clients are using credit repair companies in order to improve their credit score. I always recommend to my clients that they just go to the lender, because most of the time the lender is willing to, kind of tell you what's on your credit and what you need to improve without having to pay somebody else.
That's true.
Not saying that, you should take advantage of lenders, ability to do that, but that's a good way to build a relationship with a lender on the front end.
Yeah.
But as far as because like I said, with the credit repair, they're going to be doing a lot of disputes in order to get that information off. So from the lender side, how does that impact the buyer's ability to get the financing?
Okay, and that's another wonderful question, because I see it happen so often, right? We're trying to buy a home. We know there are issues in our credit, and therefore, we start the repair process. And the main part of the repair of someone's credit is to start disputing a lot of the accounts that are there, right? So the issue that comes up on our end now is if we pull that, and I try to find this out up front usually, but sometimes either the client is not aware that that's happening, or some other factor. But usually if we can't figure that out up front, then what we do once we pull and see those items in the credit, an underwriter wants to see all disputes resolved before they will even review a file or give an approval. And the main reason for that is when you have a dispute on a certain account, it's kind of a screen, right, on that account where the full impact of that account is not being seen on your credit score, your credit report. And usually what will happen, someone will say, hey, I started credit repair, my credit score just went up 30 points. Awesome, let's go buy a house. But the issue is, because the disputes are there, when we remove the disputes, then the score drops usually.
Right. I didn't know that.
Yeah. So say you had an account that had a few lates on it, for example, or an account that had a high usage. When the disputes on that account, it may improve your score slightly for that time frame. But once the disputes are removed, and I'm referring to removing the disputes prior to that being resolved, right? So the disputes are removed, then now the full impact of that account hits your credit report, and now the score drops. So that's usually what happens. So it may be a fictitious score that you're seeing. You see a higher score temporarily once the disputes are added on, but you really want to wait until all the disputes are resolved to get the true score that you have.
Okay, that makes a lot of sense. I did not know that if it's taken off like that it will drop the score. Because a lot of times people are like, oh yeah, I got 50 points from this credit repair, and then I don't think people really know that. So this is my first time hearing it, so I'm pretty sure it'll be the first time for a lot of people. For me, I work with a lot of the lease to own program. So typically I work with a client that may not be able to get approval right now. So I have had, I have the video on my channel where I spoke to one of my past clients, and he actually bought his house back. So at what point in the process, so if you have a client, so let's just say I have a client that's ready to buy their house back now, at what point in the process should I say, hey, you should start talking to Carlo? Or should I just go ahead and send them to you anyway, like as soon as they get the home with whatever lease to own program that they're going to be working with?
I would say do that right away, because you never know, right? There's so many clients I've come across that they think that you're not able to purchase, and we're able to get them in a home, right? So there's so many moving parts, and you may have been told, and misinformation is out there. They may say, oh, my credit score is, I only have a 610 and I can't buy because I have to be north of 620, or I have to have a 700 score to buy a house. And no, that's not true, right? Again, it depends on where you're getting that information from and the type of loan that person specializes in, right? So you'll have folks out there, and the information is on the web, right? Because they're specialized in a certain type of loan. They'll only give you the guidelines for that loan, right? And someone who does not fit inside that mold will walk away thinking, okay, I have to get my score to a 720 so I can get this conventional loan, and I have to have 20% down, and I don't have that much saving yet, so I have to wait and get all that stuff. And then, I'm able to tell them, no, you only need 3% for conventional if you have the right credit. It's actually less than FHA. It's 3.5 for FHA, but it's only 3% down for conventional if you can qualify for it. And they're like, wow, a lot of times folks are surprised by that. So you can do that. And all those loan programs are there for a reason, right? So you owe it to yourself to get that knowledge. So speaking to me up front would help you kind of see where you stand, and then you can make plans, to address any areas that needs to be corrected.
As far as like what questions you get asked the most, because I know with real estate on my end, there's same questions. What questions do clients typically ask you the most that you're kind of like, okay, I just need to kind of have a blurb out here, or I need to do a video or something to say, hey, please go here first. So
right
before you come and talk to me.
Right. I think one of the top ones I would say is, how much home can I buy? I think that would be one of the top ones that I hear. And I guess because a lot of folks, they don't quite understand maybe the home buying process. They know there are a lot of moving parts there. But they'll ask, like, I get a lot of questions about how much home I can buy, and also, can I afford to buy a home? Or am I in the position to buy a home? I think those would probably be in the top tier of that. And usually, again, how I start to answer that for clients is that it's, again, back to your debt ratio. And I'm sure we'll go more into that in a little bit, but the credit, as we just discussed, debt ratio, income and assets are the main things that will come up. Like, I always use this acronym CIA to help clients kind of remember that. And the C is for credit, I income, and A is for asset. And usually when it comes to buying a mortgage, it's kind of, you want to have as much of those in place as possible, right? You don't want to have, two of those missing. You don't want to have no income or no credit, or no asset, no income. You want to at least two of those in a good place. And in most cases, a lender can help you out. If you have good credit and good income and no assets, we can usually find a solution for you. If you have good income, assets, but the credit is poor, sometimes we can find a solution as well for you as well. So you just want to try to get at least two of those in a good spot before you start buying a home, the process of buying a home.
Okay. Okay, Carlos. So, I think, we've known each other for a few months, and I just wanted to know what the difference is, because you're a mortgage broker, correct? Not a mortgage lender. Can you tell us the difference between a mortgage broker and a mortgage lender?
Sure. So, with a mortgage broker, basically, we do all the shopping for our clients, right? So it's like going into a one-stop shop, so to speak. When a client comes to us, based on the client's profile and what they're trying to accomplish, we have a smorgasbord, a board of lenders that we can choose from, right? So, say for example, someone comes to us and we do a credit pull, right? Sometimes we have clients come to us and they have 5 or 6 inquiries on their credit report already from different lenders that they've gone to. When you go to a broker, we do one credit check, right? And it doesn't matter if we go with 7 different lenders, it's the same credit report that we would use for that individual. So it does save you having that issue of multiple inquiries, which can eventually lower your credit score. We do one inquiry and we can send it to any lender that fits your profile, right? So that's one of the benefits there. Normally we're dealing with a direct lender like a local bank or so forth. They only have their set of products that they're working with, right? And not to say it's a horrible thing, but sometimes if your profile doesn't fit inside their mold, you just get a denial and that's the end of it, right? They won't say, okay, you know what? We weren't able to get you past it on this side, but we have a few options on this end. Let's say we can explore a few other options, right? Which is what we would normally do for our clients. So that's the main difference, is that we have multiple different lenders with different things that they may look for, or you may not be able to pass with a lower credit score here, but another lender may take that, in contrast to like a local bank or so that would just have what they have in-house. And if you don't fit in that mold, then you just don't work. It just doesn't work.
Okay.